Welcome back to the Wall Street Podcast. Today we're doing a deep dive into a recent Goldman Sachs report, the America's Technology, Internet, Online Travel Q2 25 Preview, which came out July 22nd, 2025. It's a really thorough look at the upcoming Q2 earnings for online travel.
That's right. It covers key debates, updates estimates, price targets, the works. It's structured around four main themes investors are watching.
Okay, what are those themes?
Well, first, how Q2 demand actually performed against what companies guided back in Q1. Second, the level of forward investment companies are planning over the next year, year and a half, and what that means for margins.
Right, investment versus profit.
Exactly. Third is about long-term positioning, who's set up best for sustained investment. And finally, capital allocation. Think shareholder returns, buybacks, that sort of thing.
And the overall feeling, the sentiment.
It seems to have recovered quite a bit. Those earlier worries about consumer spending slowing down, they haven't really materialized in this sector.
Interesting, so stable demand.
Yeah, stable demand, plus FX is becoming less of a headwind, even a tailwind for some. So potential revenue upside, margins are a bit more mixed, though.
Okay, let's unpack that first module then. What's the current picture for online travel demand and the macro influences?
So global leisure travel is holding up, surprisingly resilient, actually.
Mm.
But there are nuances. U.S. inbound travel seems to be moderating a bit.
Visitors coming to the U.S.
Correct. And U.S. short-term rental demand also slowed down in Q2. Interestingly, Europe remains strong on that front.
Regional differences then.
Definitely. We also saw U.S. TSA throughput dip slightly in Q2.
Yeah.
Fewer people flying, maybe, or just slower growth.
Okay.
But the good news, as I mentioned, is on the currency side. Those FX headwinds, they're easing, actually turning into a tailwind now for global players like Booking, TripAdvisor, and Airbnb.
All right, so a tailwind there. That's a significant shift.
It is. It helps their reported earnings when converting back to dollars.
Okay, so given that mixed backdrop, how are the specific companies doing? Module 2, company performance and strategy.
Right. Well, Booking Holdings is definitely benefiting from its large non-U.S. presence, given that U.S. inbound moderation we talked about.
Makes sense.
And they're making progress on their connected trip idea, trying to link flights, accommodation, activity smoothly, also pushing alternative accommodations.
And Expedia.
Expedia is showing strong growth in B2B, their business-to-business side. That's helping offset maybe some softness in the U.S. consumer segment. Brand Expedia is leading their consumer efforts.
What about Airbnb?
Airbnb is seeing strong growth in its expansion markets, newer areas for them. They're sticking to their investment plan even with expected moderation in the U.S. for Q2.
Okay. TripAdvisor.
Experiences volume tours, activities is looking strong, and they seem to be getting better engagement on their mobile app. Goldman also puts a pretty high probability, 30–50%, on potential M&A activity involving them.
Interesting. Consolidation potential.
Yeah, clear's secure.
Yeah, clear's secure. Their Q1 bookings were ahead of expectations. They rolled out their ePassport product, and they're focused on shareholder returns. Any shifts in where traffic is going?
Yes, actually. The report notes OTAs, the online travel agencies, gained global traffic share from metasearch sites. And within the OTAs, Expedia seems to have gained some ground from Booking.
Okay, lots of moving parts. So let's get to the financials and risks. Module 3, what are the updated forecasts and what should we watch out for?
Goldman adjusted some price targets. Booking Holdings is up to $5,270, but still neutral. Expedia Group up to $195. That's a buy.
Buy on Expedia.
Yep. Airbnb saw a slight trim, down to $135, neutral rating. TripAdvisor, $24, and ClearSecure, $33, kept their buy ratings and targets.
And the risks, beyond just company execution.
Well, the big ones are always macroeconomic shifts, right? Anything that hits broader consumer spending could hurt travel.
Sure.
Then there's intensifying competition, and that includes, potential disruption from generative AI, changing how people search and book travel.
The AI factor.
Definitely one to watch. And finally, just the basic risk of whether each company's specific plans and initiatives will actually work out effectively in this market.
It certainly feels like the sector's shown resilience, but it's also clearly in flux with these strategic moves and tech changes. So, thinking ahead, considering this balance between innovation, profitability, and new tech like Gen AI, how might the growth and the competitive landscape really evolve from here? That's something to consider.